Holland should have never joined the euro. We should have opted out just like Denmark, but we were not given the choice. There was no referendum, and now we're stuck within the euro, which I believe is an unsustainable currency. Throughout history, people have suffered from double-digit inflation or currency collapse. And in order to avoid that, I believe, just like you can choose amongst hundreds of car brands, or when you go to the supermarket, there's so much choice. When it comes to money, you need choice too.
America is looking at these and thinking, how can we retain our power as the predominant currency in the world when you've got this massive private sector exercise going on?
You guys have been getting handed a bad deal, and that is really unfortunate, especially for the younger people in this country. While all other assets have gone extraordinarily high, your earning capabilities have been decreased. The leaders have been selling your future down, and I'm sorry to tell you these things, but you guys have got to wake up on these topics.
The Bank of England remains committed to cash. So if you take one message away from what I say today, I think that should be it.
All right, thank you very much, everyone, and welcome to our first panel of the day. So the rise of cryptocurrencies and central bank digital currencies, or CBDCs, is ushering in a cashless future, and it has vast implications for financial privacy, government oversight, taxation, and consumer behavior. So as the future of money becomes increasingly digital, there is a need for clarity, and we can achieve this by examining the diverse perspectives and potential consequences of a cashless economy. Our first panel today is titled Beyond Banknotes, Navigating the Future of a Cashless Society, and will be moderated by Nurlan Lalayev, a PhD student here at Warwick. Hand over to you now.
Hello. Good morning, everyone. Today, we will be talking about a topic that will influence all of us in the coming future. Like all of us, we have now cash, we have digital money in our pocket, in our bank accounts. And the question that we want to today discuss will again be of a concern to all of us. And at the heart of it is to try to understand what is the past, present, and future of money. Today we will be talking most about the future, but it will be also very important to talk about what is there about the past or the present. Today, before I introduce the panelists, I'd like to say one more thing, is that what we observe about the blockchain is something that economists have been thinking about for over 200 years. So trying to squeeze that into 50 minutes will be tough, but we will do our best. And one of the main ideas for instance, blockchain comes from economists who were talking about taking power from the central banks and giving it to the people. That is, introducing competing monies. And this was in the 1970s, and then eventually this blockchain was introduced. And today we will be talking about what are the perspectives for the future of money. So for this topic, we have in our session very good and well-balanced panelists. And we have people who are on the governing sides of things, who are actually in the business of managing society where people access cash. And we also have people who are trying to push the frontiers of digital money. And with that, I'd like to ask each panelist to introduce themselves for 20 seconds. And I'd go by John Howells first. John, please.
Brilliant. Thank you, Nolan. Thank you for inviting me. I'm John Howells. I run Link, which is one of the 5 regulated payment systems in the UK. We run the ATM network. You also have heard of the other ones, which are Visa, MasterCard. We've got Pay.UK and Chaps. So we're right at the middle of what's going on in the UK. I'm very proud to be here today. I think Warwick is an excellent university, arguably one of the best in the country. I think for economics, arguably is the best. And I've got a son who went to Warwick as well. So very excited to be here today. Thank you for inviting me.
Perfect. Thank you. And Nick McLaren, please. Yeah, hi, good morning, everyone. It's a real pleasure to be here at the Warwick Economics Summit, and I'm very much looking forward to the discussions. My name's Nick McLaren, and I'm the head of what we call the Future of Money division at the Bank of England, and that's the central bank for the UK. My role, I work on both cash, so the kind of current form of of money that households and businesses can use that's issued by the Bank of England. And I also am helping with our investigative work, thinking about whether we should have a digital equivalent of that, what people have called a central bank digital currency, and what we would call in the UK a digital pound. So I'm sure we'll come on to talk about those issues as we go through.
Perfect, thank you. And Paul Buitink, please.
Hi, I'm Paul Buitink. Nice to meet you all. I am co-owner and director of Holland Gold. We are a precious metals dealer in Europe. I also run an independent financial podcast called Reinvent Money. And I also tried to set up a full reserve bank in the Netherlands, sort of a digital euro avant-garde, between 2015 and 2019. And it was impossible, unfortunately, to set it up, but it was very useful to understand what the advantages are of a full reserve bank or a full reserve coin like a digital euro. So I'd like to share my experiences with you on that topic as well.
Thank you. And Nicolas Cary.
Good morning. Thank you for joining us. My name is Nicolas Cary. I'm the co-founder and chairman of blockchain.com, which was founded here in York in Northern England. We've had some incredible graduates from the University of Warwick come work for my team, and it's always a pleasure to return here to share what we're seeing happen in the space. I'm also the founder and chairman of an organization called sky'sthelimit.org, which focuses on helping early stage entrepreneurs get capital, get access to networking and business mentors and advisors and more. And so very excited to share some perspectives on what's happening in the world today, and appreciate everyone showing up here on a Saturday morning.
Amazing. And why, Nicolas, you don't go first? So how would you say, what is the past, present, and future of money?
Okay, so I prepared a little bit of an overview of this, and I only get about 5 minutes to talk. So that's about 7 times longer than the average TikTok video. So hopefully no one falls asleep. But this really could be the most important 5 minutes of your life. So I please implore you to pay attention. And if you care about your economic position in the world, a lot is changing very quickly. Some of it is good news, and some of it may feel intimidating or scary. But let's talk a little bit about it. So what is money? I think this is one of the most uncomfortable topics that almost anyone can explore. It's one we don't tend to spend enough time at home. Our parents kind of introduce us to these things usually too late. Almost everyone in this room and around the world will spend their whole lives in pursuit of money. Why? Maybe to invest in their education, might be to put a roof over their head, to maybe have a family someday, to go on that holiday or vacation, or maybe go on that date you've been dreaming about. So what is money? Money is a social construct. Human beings invented it, and it's older than written word, which is why in prehistoric burial sites in northern Scotland, we find artifacts, old types of money. We find seashells and beads that have traversed across the world, across markets from the Middle East. Money is best maybe understood as a collection of beliefs or systems that we use to exchange wealth over time. So in other words, they're technologies that we have developed that are useful for trading goods and services. And we have tried many forms of money, not just in the last 200 years, but since the prehistoric age. We've used seashells, feathers, gold, cigarettes. We've used fiat currencies, which are government-created cash instruments, and more. So money has persistently evolved to meet the needs of the market. In an ever-increasing digital world where we use technology to keep in touch with our loved ones, to consume our entertainment, to develop incredible breakthroughs using data and more, maybe it makes sense for our money to be digital too. Money requires really 3 properties. It's important to think about these. It needs to be useful as a medium of exchange. It ought to be a store of value, and it needs to be a unit of account. And so it has to be based kind of in the laws of mathematics, which is why we have PhDs studying these things to help us understand them. Now, money gets to have features too. You can think of it a little bit like software. What are the features that your money has? Well, your money should be fungible. It should be counterfeit resistant. We shouldn't be able to go to the library and just make more of it off the printers. It should be durable and divisible, and it should be fit to purpose for the age of the world and the market it exists in. So now we get to the fun part. Who gets to make the money? How much of it should there be? Where should it come from? And maybe in this digital age, maybe our money could be digital too. So 18 years ago, I was seated in an audience just like this. It was 2007, 2008, and we were in the midst of a great financial crisis. I wanted to go work and have a great job and an incredible career, and I couldn't find one. And sadly, to be honest and realistic about your situation, there are huge challenges facing you. The Office of National Statistics has some very depressing numbers to reveal to you today. Over the last 4 years, the cost of gas in this country has increased 94%, electricity 78%, your groceries are up 25%, your rent 25%, public transport 18%, and unfortunately, your real wages have declined by roughly 2.5%. You're entering into a challenging era. So what's going to be different for you? Well, there's a revolution and also I would say a change of how we're thinking about economic and wealth systems. And we're entering into a world where there's now all kinds of new competition over the legacy systems. The incumbent systems are fighting tooth and nail to hold on to the old ways, their control over the economic concepts and social mobility and economic mobility. Doesn't have to be that way, though, because you're about to inherit this world. So I want to talk a little bit about some of these inequalities, and we'll have an opportunity across this panel to debate them. But we've now created capabilities that make it possible for all people in the world to instantly send, receive, secure, trade, and exchange digital instruments of wealth. This makes it possible to create more economic velocity, make the pie move a little bit more quickly for everybody, and basically put money on rails that run on the internet. I think these are promising things. They should help us basically make it possible for people, regardless of the circumstances of their birth, to economically participate in the world. And that's one of the things we're focused on at my firm, and I know some of the other people on this panel care a lot about these issues too. So there's some systemic imbalances that you guys are inheriting, and there's going to be a lot of work to do on all those topics. But I do think the future can be bright too. We have to continually innovate. We have to make things better. And without the concerted efforts of clever people to work on those things, we do stagnate. So don't be shy about getting involved, learning as much as you can about this. Your education is something you can take with you for the rest of your life, but you have to stay curious. The world is not a stale place. It is evolving quickly. And even in the last week, we've seen some extraordinary changes that'll be discussed, I'm sure, in this panel. But I'll relinquish there. I was asked to give sort of a quick overview. We do not have enough time to go through all of it, but hopefully that was helpful as a beginning point.
Brilliant. Thank you very much. Now I'd like to give the floor to Nick and ask about how should we move on to the next level?
Yeah, thanks very much. I was planning to start my remarks by talking about cash, and I thought that was going to be the past, but actually Nicolas has definitely beaten me with talk of cowrie shells and various other things. So great to get that historical perspective. So when talking about the future of money, I think the thing I wanted to be very clear upfront about is the Bank of England remains committed to cash. So if you take one message away from what I say today, I think that should be it. And our Governor, Andrew Bailey, our Chief Cashier, Sarah John, they've said on numerous occasions that as long as the public still want banknotes, we'll continue to provide them. And I think there are some good reasons why we expect cash to continue to be used and needed for some time, even in this forward-looking digital world that we're talking about. The title of today's panel is Navigating the Future of a Cashless Society. Perhaps it's better described as a less cash society rather than a cashless society. So transactional use of cash has been falling steadily for a number of years now. So from around 50% of transactions a decade ago to around 10% today. But there are still a large number of people who use cash, and it remains the second most frequently used payment method behind debit cards. According to estimates from the Financial Conduct Authority, the FCA, there are over 1 million adults in the UK who don't have a bank account and are wholly reliant on cash. They then estimate there's a further 2 million people who use cash for almost all of their transactions. And importantly, these groups contain many of the most vulnerable people in our society, with cash use particularly prevalent among lower income households, the elderly, those with disabilities. When we look to the future and we're thinking about how these new forms of digital money and things are going to evolve, I think it's really important to remember that cash probably still has a role to play too. It's possible that the size of some of those groups might fall over time in response to demographic changes, progress on digital literacy, which I think, John, you talked very eloquently about and may come on to discuss. But many of these groups would find adopting these digital alternatives difficult. So we do expect it to be important to maintain continued access to cash. And even for those that don't regularly use cash, survey evidence suggests people really value the option of using it occasionally. That could be when digital payment methods aren't working, or simply where the physical nature of cash makes it more convenient or more suitable. The problem that we face is that the less often cash is used, the more expensive it is per transaction to maintain the infrastructure to provide it. So it's vital that we take steps to ensure that cash remains available for those that need and want to use it. And to do that, the Bank of England's working with the other public authorities to make that happen. So the FCA's got new rules to ensure that there will be sufficient access to both withdrawal and deposit facilities for cash across all of the UK and all of the regions. And at the Bank of England, we've got a new supervision regime to make sure that the plumbing behind the cash system, what we call wholesale cash distribution, remains effective, resilient and sustainable. So that's probably the past, but I say also part of the future, at least for the foreseeable future. But looking ahead, although we think cash will play an important role, there's many environments where cash can't be used in an increasingly digital economy. And when you think about payments today, so the most common payment method is debit cards, often contactless, and increasing use of digital wallets like Apple and Google Pay. Generally, paying for stuff in the UK works pretty well for the consumer. You know, you tap your card to pay for your coffee or your bus fare. It's very quick, it's very convenient. But it's not perfect. For instance, you usually need to exchange bank details to transfer money to someone. Many websites still require you to type in manually your details. The things like direct debits can be quite clunky and difficult to change. And the world doesn't stand still. Innovation in money and payments is coming, it's already happening, as Nicolas said. New forms of money, like private stablecoins, they have great promise. They could bring many new functionalities, so things like smart contracts. So that could allow you to, for instance, make payments automatically once it's verified that your goods have been delivered. Obviously, you could get a picture of your good on someone else's porch, so there needs to be a way of verifying it, but that's the type of thing that we could do more seamlessly. But if that innovation isn't done in the right way, there is a risk that these innovations in money and payments could pose threats to our economy and financial system. So these new forms of money may not interoperate easily with one another. So in extremis, you could see different prices for different forms of money. So imagine the price of your coffee being different whether you choose to pay in MasterCard or Visa. Currently, there's a range of measures like banking regulation, rules and faster payment systems which prevent that occurring. So if someone transfers you £10, you don't stop for a minute to think about whether that came from, say, Barclays or HSBC. And cash also plays an important role in ensuring what we sort of call the uniformity of money. You always know you can exchange £10 in your bank account for £10 of banknotes simply by going to an ATM. But as cash becomes used less frequently, we're now asking ourselves the question of whether there's a role for a digital equivalent, a digital pound. This could be a reference asset in this new digital economy to support the uniformity of money. And it could act as a bridge to deliver interoperability between these new exciting forms of money and existing forms of money as we know them today. So we're currently undertaking a 3-year design phase, which ends in 2026, to decide whether we should develop a digital pound. No decision has been made on that yet, and the government has committed that any decision to launch a digital pound would need to be supported by both houses of Parliament. So to conclude, the Bank of England is committed to cash. We're exploring the case for a digital pound, but we see those two as very complementary in the forward-looking world. So thanks very much.
Thank you very much. Thank you very much. And those are interesting points. And then now I'd like to have a different perspective, and this will be from John. And I'd like to ask, what is your take on what you just heard from Nicolas and Nick? And as well as, how do you think we should navigate the future of a cashless society?
Well, I'll talk about the UK, but the data I'm going to give, I think, is applicable to every Western European, Asia-Pac and North American country to some extent. And the reason particularly the head of the ATM network is here is because in the UK, 95% of the cash comes out of the ATMs, 50,000 ATMs in the country. So we've got really excellent data, what's going on, what's changing, what's driving these things. So that's why Link is at the heart of cash policy in the UK and why we're regulated by the Bank of England. Strange to be sitting here.
Not by me, actually, Dad.
Now, look, the thing about cash, as Nick said, regardless of why, it's not some wicked conspiracy of governments or something like that. It is reducing in use for payments. And when I joined Link 10 years ago, it was 6 out of 10 payments. Just before COVID, maybe 4 out of 10, 1 out of 10 today. So cash use for payments is going down very, very rapidly. And if you'd asked people 5 years ago, who cares? Does it matter? You wouldn't have got much interest. But today, it's a really politicized subject. And on the one hand, You've got groups of people who'll say that you've got to preserve cash, moving us to digital payments. That's wicked global elites trying to control how we spend, what we do, get hold of our data. It'll be in the Daily Mail, it'll be Nigel Farage, it'll be GB News. You've got the other side of the debate, which is digital has made all of our lives infinitely unrecognisably better, both in terms of health and wealth and leisure, and digital payments, they're the gateway into that digital world. So you've got to go there, and you've got that polarised debate there. And it's a really, really tough one. And dealing with that polarised debate, I think, is one of the big policy issues as we move into that more digital world. If you look at some of the facts about cash, and if you ask UK people, 85% still use cash. So it is not true to say that it is a minority activity. So you've got the majority of the population using cash, once a month, some more, some less. About 95% say we're not ready to go cashless yet. Some of those concerns are for inclusion perspectives. They recognise that it's going to exclude people who don't have a bank account, they use cash. A lot of it is to do with resilience, and we've got all sorts of examples only in the last year or so, things like the CrowdStrike problem. We've had Visa and MasterCard both go down in the UK and other major markets where it just stops. And if you can't use digital payments, then you cannot live your life, and you've got to divert back to cash at the moment. So we've got a whole bunch of really interesting issues which say in the UK we're not ready to go cashless yet. And until we can get the resilience up to 100%, we may never be ready to do without cash at all. But I think the real practical problem is that political problem, the division in society that we've got about whether it is a good thing or a bad thing. And you cannot move to a fully digital economy until you've got support from the whole population to do it. And in the UK, we've got about 5 million people, so including the people without bank accounts, but also the people who just don't want or can't use digital yet. 5 million people who rely on cash, and it's just too many to leave them behind. It's 10% of the adult population. So from a political and policy point of view, it probably is great to go to digital, but if you cannot shift those 5 million people, then you've got a problem. So I think from Link's perspective, the big policy issue is how do you get digital to be completely inclusive from a policy sense? And that's not not just coming at from a moral, that's a good thing to do. It is an economic perspective. You cannot have 10% of the population left behind and expect to have a good functioning society. I think the good news in the UK, Nick has mentioned the legislation to protect access to cash. So we have got, I reckon, at least 5 to 10 years worth of protection in the UK, led by Link to make sure that every high street has got an ATM, pre-ATM, and every town has got a bank of some sort. And you'll read in the newspapers, if you're reading UK newspaper stories about shared banking hubs and all that kind of stuff, and that will protect access to cash. And I think that will, as I say, be 10 years. It buys us 10 years to deal with digital inclusion, because eventually shops will stop accepting cash. You'll have to go to the special window at the back of Sainsbury's to go and spend your cash while everyone else is using digital. So we've got to get that digital payments inclusion up. And I think the good news here, interestingly, comes from North America. And I realize Donald Trump is deeply divisive, so I'm not making any comments about whether he's good or bad or not. But if you look at one of his executive orders, the Digital Assets Executive Order, which he signed this week, and ignore all the stuff about Trump coin and the fact he's banned CBDCs in America, and actually look through to read it. It's only a few pages long, and it talks about a digitally inclusive payment approach. So it's explicit about making sure there's open access for citizens and companies to a new digital system. It bases it on dollar stablecoin. So it is looking at taking that dollar dominance into the digital world and making it global. So there's a real drive there. Again, it's not just nice and cuddly. There's a geopolitical real determination behind what America is going to do. And the thing about where America goes, if America goes there, that means that Europe, the UK, everywhere else will have to sit up and take notice, and it will drag that digital payments policy really, really quickly to the front of economic development in the UK, Europe and elsewhere. So I think very, very positive and exciting times.
Perfect. Thank you very much. Those are very, very interesting points. And that leads naturally to the question, and this I'd like Paul to answer or like try to answer would be, what type of digital currency should we try to develop?
Yeah. So maybe first two quick questions to the audience. Who's still using cash on a weekly basis? Okay. So it's just a few, right?
The audience being asked.
And who owns some crypto? Also not that many. I'm a little bit surprised. Yeah. So, well, first and foremost, I think we need freedom of choice. So in that sense, I'm a libertarian. I like people to choose their own currencies to avoid a currency trap. For example, my parents-in-law, they live in Ecuador, and in 2000, Ecuador went from the sucre to the dollar, and they lost overnight 50% of their savings. And that happens time and again throughout history. People have suffered from double-digit inflation or currency collapse. And in order to avoid that, I believe, just like you can choose amongst hundreds of car brands, or when you go to the supermarket, there's so much choice. When it comes to money, you need choice too, because I think that will eventually lead to better money. Take me, for example, I live in Holland, which is part of the euro. Holland should have never joined the euro. We should have opted out just like Denmark, but we were not given a choice. There was no referendum, and now we're stuck within the euro, which I believe is an unsustainable currency. Just if you look at the setup, I mean, already in the 90s, a lot of economists warned that the euro would never work in the long run, because if you look at optimal currency theory, these countries are just too different to form an effective monetary union. For example, the euro is too cheap for Holland, which makes inflation higher in Holland, but too expensive for Greece. So in the end, it will probably fail. And then a lot of people in Holland will suffer as a result. If we would have freedom of choice, we could have devised a different, more diverse currency system in Holland, and we could have all benefited from that. So I guess it's very much in line with Nicolas. Then on the topic of the CBDC, so since I believe the euro is fundamentally flawed, it doesn't make sense to add another layer on top of that euro. If you believe the foundation of a house are rotten, don't build an extra floor. So I strongly advocate against the digital euro at the moment in the Eurozone. For the UK, on the other hand, it's different, because you're a monetary sovereign nation, and you can have a good discussion in society about how you are going to design your monetary system, because there's a lot of design questions you need to answer. For example, at the moment, 97% of the money here is created by commercial banks when they create credit. So only 3% is public money. And it's imaginable that as a society, you want perhaps a larger share of public money, like it used to be the case. And then you want to ask yourself, okay, do you want to keep cash, or you want to maybe make part of the public money digital? And if you have a larger share of public money, then also banks can behave more like free market actors. You can remove deposit insurance, and you can have a free market of commercial banks, and then a safe haven of public digital money. So that could be possible. It's something you could talk about, but it has to be part of a fundamental discussion in society on how you are going to set up your monetary system. And I believe cash is important as a resilience system, because we've seen often, just like you mentioned, John, that sometimes systems are down, and it makes sense to have a physical backup in the form of cash. And when it comes to CBDC, make sure you design it in such a way that it cannot be used in the future by a government as a tool of censorship and control, because maybe the current government is benign and they say we have no bad intentions, we are just going to make a beautiful payment option for our citizens, we're not going to program it or censor it, but it could be in the future that some other government is going to abuse that system. As an example, in Holland, for example, in the 30s, we had this amazing system where we tracked all citizens. So we knew in the 30s all ethnicities of all Dutch people. So when Hitler came to Holland, he knew exactly where all the Jews were. Just to make the point clear, that be very careful what you design and how it's going to be used in the future. So I'd like privacy to remain for citizens, whether it's here in the UK or in the Netherlands. Be very careful what you design and include the whole society, not just the banks, but also, I know, for example, you have Positive Money in the UK, that they're really in favor of a full reserve banking system. But make sure to really think about how you design the system for a long term, and also allow freedom for people to choose amongst currencies. Because if you have a good currency, it will eventually be used as such. And right now, also with the digital euro, the way they're designing it, it's basically a solution looking for a problem, and it's just going to cost a lot of money, and it's going to be built on top of a currency which is already unsustainable in my view from the start. So But in the UK, I think there's more possibility. In that sense, it's nice to have these different types of gentlemen with different views. But I think there's a big chance in the UK to set up something that's sustainable and good for everyone.
Perfect, amazing. So now we have heard four very different market perspectives, somewhat overlapping, distinct opinions. And we would like to, first of all, think about it. And then take your chance, and here is your chance. And you can ask questions. Maybe I don't exactly know how the question part happens here. I don't have the iPad for the online one. And so are there questions? So I see 1, 2, 3. Okay, there are a lot of questions. Very good, very good. I don't know how to proceed. I'll just pick, you can go first. Lady with glasses, I don't really, sorry. Yes.
Thank you. My name is Yasmin Tsiganik, and I am here for Orange Magazine, studying in Budapest. And my question would be to you, Mr. Buitink. I was wondering if you think the problems with euro could be counterbalanced by deepening economic integration, which is the ultimate goal of the EU.
Yeah, there's basically two ways to solve the problem in the Eurozone. Either you become a political union or you abandon euro, basically. There are no other flavors, I believe. But in order to become a political union, you need to have one demos, one people in a way. And I think the European countries are so beautiful in their diversity that they will never be able to align completely economically, linguistically, culturally. So in the Netherlands, for example, we just need a different monetary policy than, for example, in France or Spain. If you look into the theories of Robert Mundell, he won a Nobel Prize in the 60s about when you can form an optimal currency area. There's lots of conditions you need to meet. Even the United States is not an optimal currency area. It's just basically a gradient, right? So maybe the US is 90% and we're like 30%. But I don't think it will ever meet all these conditions. And I think it's probably better to anticipate and prepare for a dissolving of the European Union, because too many people in the different nation states are not willing to become a European society integrate completely. Most people love their cultural differences. They love to speak their own languages. If you already look in Brussels, all these different languages that are being spoken, it just doesn't create a sense of unity. And I don't think we'll ever get there. Name France, for example. When you're 62, you can go, you can retire. In Holland, it's 67. And like these kind of cultural differences, I don't think you'll ever be able to solve. So instead of becoming this political union, I think you should focus on trade with each other and try to slow down when it comes to becoming what some people envision to become one European nation.
Okay, perfect. So more questions. So I'd like to get something from the back. Yes, you can as well. Yes.
Hi, thank you so much for the panel. My question's for Nick McLaren. So I actually found the point on uniformity and the singleness of money very interesting. And the fact that I never considered it before means that the Bank of England must have been doing a very good job. So I actually wanted to ask and better understand what regulation or efforts does the Bank of England do to maintain the singleness of money? And also more in relation to the panel, what would possibly be the effects of an increase in public money compared to private or commercial money? Because I read that an increase in public money could reduce deposits and therefore increase the cost of funding for commercial banks. So I was just curious about that. Thank you.
Yeah, it's a really, really good question. I think it's really interesting that this concept of uniformity of money is not one that was discussed much previously, because we just take it for granted, right? You don't think about the fact that generally in a country you have a currency and you know that unit of account is the one that you'll use for pretty much everything. The trickiness from an economist's perspective is it's really difficult to work out the sort of marginal contribution of the different bits to that, because you don't really have many examples of where it's broken down to do it. You can go back to some historical examples. I think there's some case in the United States in the 19th century where the different commercial banks issued their own paper notes. And there's some really interesting stuff there, but it was a very different world. In terms of what happens today, there's a few really key components. So one is, as was said, most of the money is commercial bank money. So we need to make sure that we trust our commercial banks, that they're very safe. You know, we've seen the examples of what happens when that breaks down, the sort of 2008 financial crisis, although interestingly, even then, I don't think there was any breakdown in that uniformity of money. Another important part is things like deposit insurance, so that you know that if your bank does fail, then you know you still up to £85,000 in the UK will be able to get your money back. And then there are also things like the Bank of England runs the wholesale settlement, which sits behind the commercial banking sector. And again, that is something that allows all the settlement between the different payments to happen in very safe, financially risk-free money at the central bank. And that wholesale settlement is incredibly important part of the financial system in the UK and globally. I think the thing looking ahead is we need to make sure that whatever framework we design, we need to make sure that we're kind of working out what are the best bits of the current form of things that allow uniformity of money. Maybe some of them are too strict. Maybe there are things that we don't necessarily need to do. They're almost belt and braces, as people would say. And so we need to make sure we get that balance right so that we allow for these new forms of money to be innovative, to offer new functionalities, to develop and to support a more digital economy, but in a way which retains some of these core values of monetary and financial stability.
Nick, I have a question for you. Do you agree that as long as you have deposit insurance, it doesn't make any sense to put a digital pound next to it, because people have no incentive to use the digital pound when their banks are also safe and insured?
So I think it's a really interesting question of why would you use a digital pound? So it's a great idea potentially from a central bank's perspective. Like, we care about uniformity of money, but when you're going out to pay for something in a shop or pay for something in an online game, you're not thinking, oh, hang on a minute, I'm going to check which of these is the best payment option for the uniformity of money or things like that. You just want something that's convenient, that offers the functionality you want. So I think the answer to that is probably more about how do you, if you think that you need a digital pound, because there are some things that deposit insurance won't deliver. It gives you confidence in your banking sector, but only for, £85,000 is a lot of money for me. It's a lot of money for a lot of people, but obviously...
But your holding limits are lower because now the central bank digital currencies have low holding limits. So even for the wealthy people that maybe look for a safe haven where they can store more than 85,000, it's not going to apply because you have small holding limits. So you're basically building a product that's not, at least in the Eurozone, they're building something that people are not interested in because they have the banks, they're insured, they get interest on their bank accounts, not in a digital Euro account. There are small holding limits, so it's basically dead on arrival.
I think that the way I tend to, so I think it is a really important thing about making it that people want to use it, but the way I would put it would be, the way I would put it is at the moment, you're sort of looking at, banks are doing things. I think I would say new forms of money are coming, right? It's not a case of should we have new forms of money or not? Will people bother to use them? I think, the things that Nicolas described, some of these private stable coins, things like that, they will offer new things that will be more convenient to people. They will start using them. They'll move away from the things they just use today. The question is, what do you want those to look like? Do you want to have, as you really nicely described, some form of public option in amongst those to make sure that the system looks about right? And I think that's how I would put it. That people are going to use these other things. It's a case of which one will they use.
Okay. Can I come in here as well? Because the thing about money, and this may be controversial, but this is about power of governments and consumer choice. So when you read stuff around, oh, well, we've got this exciting technology and what can it do? That is all rubbish. You need to look at it through the lens of government power and consumers. That's what's driving this. If you go back to the original work which triggered all of the governments and central banks looking at CBDCs, it was Facebook's Libra, where they were going to launch a digital currency which was going to be public, it was going to be privately owned, unregulated, and was going to remove from governments the ability to control money in their country. So when you look what's going on, look at it always through the lens of government power and consumer choice. If you look at the growth of stablecoins, dollar stablecoins, which is extraordinary, it is hundreds of billions of pounds worth of stablecoin in Circle and Tether, which are in issue at the moment. And Trump is looking at these and America is looking at these and thinking, how can we retain our power as the predominant currency in the world when you've got this massive private sector exercise going on, which is leading him to sign that digital asset executive order this week. If you look at the global south, they are being dollarized and their local currencies are being removed as relevant because consumers are choosing to use those two stable coins. That is where the growth is coming from. And we sit in Western Europe, and I appreciate your points about the euro and all the rest of it, but it's all pretty comfortable in Europe. Everything works fine. But what is worrying the governments in Europe is that power. How do we retain the euro or whatever it's going to be as relevant in a world where trade and cross-border flows and activity is increasingly going to be in the most useful and safe digital assets? So that's what's going on. That's what's driving all of this. And that's why I say, look at what's going on in America, because once America decides to do something, I mean, I think that's where the action is going to be, and that's where we need to look. Maybe China as well, but I think North America is where you'll see what's going on.
Perfect. And now I think it will complement everything if Nicolas, you also make your comments on this issue, so that we have like a whole panel making a comment on this include the issue.
I'll try and be brief because I know there are other questions in the audience, and hopefully we can answer a few more. I think it's extremely interesting that in Donald Trump's executive order this week, which was entitled Strengthening American Leadership in the Digital Financial Technology Directive, he prohibited the development of central bank digital currencies. This is an extraordinary concession from the government of the United States, partially, I think, because of the concerns of abuse, essentially around creating the capability for a government to surveil all the economic activity across potentially the country and around the world. So they're basically saying this stuff is powerful and dangerous. And even Donald Trump, who has a strong, I would say, ego, is saying we actually need to be very careful with this specific thing. And so they're basically encouraging private sector development in this sector. And to add a couple things around this, because it is pretty impressive, they are emphasizing essentially adoption of digital assets and blockchain technology, an emphasis on individual rights and privacy, especially including everything related to self-custody of funds, to staking, among other things. These are new concepts in the digital currency world. Support for dollar-backed stablecoins. This is a huge deal. Basically, Donald Trump is saying it's in the interest of America for everybody on the planet to have a digitally denominated dollar wallet on applications that they can download on their phones. And the extension of dollar hegemony, I think, which has been very strong over the last century, was basically just positioned to be extremely strong in the next century. Finally, you're getting real regulatory clarity. He has revoked essentially everything that happened in the last administration, which was a very hostile regime against innovation and money in general. All the banks in the United States are now going to be able to custody digital assets. And among other things, there's a whole working group that's being established around potentially building a Fort Knox of digital assets in the United States. So to describe the magnitude of this, we won't have time for today. But this will change the composition of the world economy over the coming decade. And to be on the wrong side of it would be foolish. It's moving fast, and it is in the interest of people to get well understood in this. And if I had one piece of advice, it would be to go do a little bit of homework. No one here has talked about going back to the first thing, which was reading the original white paper entitled Bitcoin, a peer-to-peer electronic cash system. It is what sparked this entire argument, this conversation over a decade ago, and it's worth revisiting it because it describes the concept of an always-on financial system for the internet that does settlement and clearing 24/7, 365. It embraces some really important concepts around decentralization, mitigating risks, having a capability that can't be just turned off because there's a CrowdStrike problem in one country versus another. This thing is cloud agnostic, and it operates with a lot of resiliency. And it's been under constant threat for 15 years now, and it is consistently operated with neutrality. Designing this type of system would be almost impossible for a central bank to do on its own. And so we now have a market that's developed a solution, and people around the world are adopting it voluntarily, which is key.
Perfect. Thank you very much. Now I think we would collect questions, and then I'd ask you to answer very briefly. And then the last point would be, after we collect questions, I'd ask each panel member to make one concluding remark so that for you to take away. So I would collect 3 brief questions, please. So 1, and then I'd collect something from the back, 2, 3, and that's good. Okay. 1 here, and then we have 2 over there. And we have the third one, is the man raising hand. but we will get your mic as well. Okay, you can start.
This was for John in particular. You talked about importance of increasing digital literacy, particularly for marginalized communities. I'm curious as to the how. Like, how do you actually go?
So, and then we collect question from, you already have a mic. Yes, please.
Hi there. So I had a question regarding how commercial banks often push back against government regulation when it comes to increasing transparency. So how would the Bank of England or any bank in general work with commercial banks such that they would increase or be willing to increase transparency, especially when something like a CBDC gets implemented within the economy?
Yeah, perfect. And the third one?
Hi, I'm from Georgetown University. So my question is directed to Paul. You mentioned that the euro is, it's not the most stable. You mentioned something regarding to that. So I just wanted to ask if, so do you think one of the reasons to this is because of the very fast expansion of the Eurozone? Like, I know it originally, to my understanding, it started with the Western European countries, and then other countries kind of joined it. So do you think due to this, sort of rapid expansion, the whole Eurozone itself kind of became a bit more unstable? I think one example is Croatia, which recently moved to the euro, and then prices shot up after the conversion. So I'd like to hear your thoughts on that.
Okay, so I would ask very brief comments because we are almost running out of time. So if you have brief comments, less than 20 seconds, please go on.
Okay.
Sure, because I think otherwise we're not on time. Yes, please. I think there was first.
Shall I start with the last question, then I'll answer that one? Yeah. In general, I agree with you that the more countries you add to this mix, the more diverse it becomes. And in terms of currency unit, that's not a good thing per se. We would have stuck to certain core European Union countries, such as Holland, maybe if like Finland, Austria, Germany. I think you would have had a better chance of having more sustainable currency. So the worst thing we can do now is adding more countries, and that's exactly what they're doing. It's like we have a bad marriage and then adding more children, basically.
Yeah, that's an interesting point. And then anyone else would like to make a comment?
Good. I'll answer I'll answer it for the UK, but I think it's the same for many other markets. You can't leave 5 million people on cash, and because you're excluding them from the economy where all the action is, you have to work out how to get them across. Some of that is teaching, and I think in the UK where we've got a large network of shared banking hubs opening up in the land, you'll see them in the press. And I think those high street vehicles are the sort of place where you can do some of that education. If you look in the UK in the past where we've done big programs of change, and the example I'd give would be when we moved from pounds, shillings and pence to digital back in the 70s. That was a top-down government-led initiative. And my view is in the UK, to get those 5 million across from cash to digital, you need a top-down government-led initiative. Some of it training in banking hubs and places like that. Some of it tech, which is designed to be acceptable to the 5 million people, because for a whole bunch of reasons, what's out there at the moment, they can't or will not use. But we need to do it. You can't leave 5 million people behind if you're going to have a successful growing economy.
Perfect. So any other comments?
I have to say something on the question of whether or not banks will ever, either through regulation or through their own interests, become more transparent. That will never happen. It is against their interests. They make money on your money. The whole business model is predatory, and don't expect that to change. That's like asking a horse farm to invent a faster horse in the age of the automobile. It's crazy. So time to put those things to rest and to invent a better future. I think digital currencies and crypto assets reduce barriers to entry, increase transparency, and enable a type of financial inclusion that has never been possible. Just consider really quickly the United Kingdom's position on these things over the last decade. They have deliberately made it difficult for entrepreneurs and companies in this market to be successful here. And it has made it almost impossible for regular people to have access to these assets during one of the most important wealth creation events in the history of mankind. And so fewer people have access to these capabilities in this country because of the unintended consequences of regulation for consumer protection purposes. And meanwhile, you guys have been getting handed a bad deal. And that is really unfortunate, especially for the younger people in this country. While all other assets have gone extraordinarily high, your earning capabilities have been decreased. The leaders have been selling your future down. And I'm sorry to tell you these things, but you guys have got to wake up on these topics. It is not okay. And you guys got to fight harder.
Perfect. And yes, Nick.
Yeah, and I think from a last thing, I think there's been a real theme of this innovation, new frontiers, doing new things. And I think that is really important. That's something you should definitely take away here. I think we need to also take away a theme of that needs to be done in a safe way. You know, you've seen what happens if you let financial innovations go ahead. The benefits of that innovation can be completely destroyed by a large crisis. You know, the impact on every single person in the country of a crisis is absolutely enormous. The benefits of some of these innovations accrue often to quite small groups in the economy. So I think that's why it's really important to think about the broader impact of these things. Do the innovation, create a great environment for it, but do that in a way which sort of doesn't have those risks for your economy.
Perfect. Thank you very much. And I do apologize that we didn't have the time to answer all of your questions in detail. And with this, we conclude this panel. Thank you very much. And we hope you have more questions than answers.